On Money Matters this morning, there are growing signs that interest rates are about to jump early. Financial markets are now forecasting the Reserve Bank could start lifting rates as early as June. That's soon after the expected May federal election.
Any hike in interest rates won't just have an impact on homeowners, but shareholders and even wage earners. Joining us now is Weekend Sunrise money man Scott Phillips from Motley. Good morning to you, Scott. So why is the Commonwealth Bank so convinced that rates are going to rise in June?
And Chris, good morning. It comes down to a couple of things. The first is rates overseas are almost certainly going to be going up well before that. Some pundits in the US expecting their rates to go up by a full 1 percentage point in 3 meetings. So that puts international pressure on us. Here at home, the inflation rate is the big concern. And if you look at the way the prices are rising and may continue to rise, I drove past a petrol price of $2.18 this morning on the way to the studio. That is going to put a lot of pressure on the economy. The RBA also needs to keep that under control. So they're balancing two things. They want to keep the recovery going, but they don't want to let inflation get out of hand, which causes its own problems 6 or 12 months down the track.
Let's come back to the consumer then. Is it worth fixing your interest rates now?
I think it probably is if you have the right circumstances. So we can't know everyone's circumstances, of course, but if you look at the way the rates are going to rise, and there's still some really cheap fixed rates out there, it makes a whole lot of sense to at least look really seriously and say, hey, if I can lock in a rate for 2, 3 or 5 years, if I know I've got certainty of income, if I know I can pay the loan off, and I want that certainty of repayment, if I know they're not going to go up over the next 2 or 3 or 5 years, the rates are really low. You get less than 2% now on a fixed rate if you're the right person, so the right LVR, deposit, all that kind of stuff. But yeah, definitely time to look around, and for many, many people, perhaps most, fixing might be the right choice.
I want to talk to you about half-yearly results. Company pros, pretty interesting. Bunnings not doing as well as you'd expect. During lockdown, we were all at Bunnings. That's what we did.
We literally were.
The only place we could go.
That's right. Yeah. Apparently, was what do they call it? Definitive retail, whatever they called that phrase. I built a chicken coop during lockdown.
I know. We have pictures of this. I think.
There we go.
Yes, that's impressive.
Okay. That's the chicken coop that was done during lockdown.
Office there, right?
Okay. Yeah, exactly. It's good to have somewhere to go just in case I'm not working in the house. So we all spent the money this time last year. So the good news for Bunnings is sales were up a little bit, about 1.2%. Profit was down by about the same amount. That's not welcome for anybody. But think about the amount of money we spent this time last year, for example, in doing all these things. There's only so many chicken coops you can build. I'm not going to build another one anytime soon. The same with some of the big retailers. JB Hi-Fi have sales declines because we all replaced TVs and stereos. And you can't do it, you can, but you won't do it a second time in 2 years. So Bunnings, not great. Maybe it's sausage sizzle, maybe it's not. But
just quickly, Scott. Oh, okay. Well, we've run out of time, mate. We're great to talk to you again, Scott Phillips, for joining us this morning.